we want people to invest in us because they like us first and foremost, and they trust us, and we will immediately hit that that thing what you just said, that we're not the only one in the room, and we encourage people to go and diversify and be invested across multiple different operators, because you can have the ability to see who you really like, who does the reporting the best, who is most transparent, who is a big faceless company that's just too busy to pick up someone's call. We like it that people have our personal cell phone numbers and they can call us any time of the day. So we're not trying to blow smoke up our own.
Yes.
But
drink your own bathwater is another way of saying it. Drink your own bathwater. Yes.
Right. But we're realistic in what we're doing. We just want to be sustainable in our growth.
I am Christina Suter, and this is the Real Estate Breakthrough Show, where we talk about the reality of real estate, the mindset you need in order to face the reality of what it is, and tips and tricks to get you moving forward in investing. I am your host, Christina Suter.
Hey you, this is Christina Suter on Real Estate Breakthrough. So happy to have you guys here listening today. I have Reed Goosen and Ben Gray with me. I am excited, and I'm always excited about my guests because I wouldn't invite them if I wasn't excited about them. So about 6 or 8 months ago, they gave a market update that I thought rocked the world, and I really need everybody to hear it. But we're now 8 months later, so you're just going to have to not hear the market update, but why these two gentlemen are rocking the world in their particular way in real estate. So Reed, why don't you give us your bottom line, your history first, and then Ben, why don't you rock from there?
Sure. So originally from Australia, moved here in 2012. So been here over a decade. Chased a girl out here. She's now my wife, and we're just talking offline in the green room about our first little baby who turned a year old last week, and the challenges of having a business and raising kids. So learning first and foremost, and I know Ben's got his own experiences, but moved out here just to really chase her. Started investing in real estate early on when I moved here in 2012. My background's in structural engineering, and then moved to LA. And I think you and I actually met probably around 2014, 2015, all those years ago at the FIBI events in Pasadena when I was actually living out in Eagle Rock. Over the last sort of decade, been involved in acquiring a bit over $700 million of multifamily real estate, grown 2 different syndication companies, have obviously Ben, my business partner, on the line here as well. And, just enjoying the journey along the way. So I'm sure we'll unpack a lot of it and get into some nuances of what we've built.
I want the public to notice. I want you, my listeners, to notice. You met me back when you were a pup investing in real estate, 2014. And you've gone from there way past me to 700 million. I'm just calling it what it is. This is not insulting myself. It is acknowledging the brilliance of you guys, right?
I will say, run your own race. Don't compare. Never
That's
compare.
Right.
Don't run your own race.
That is awesome.
I'm guilty of it, but I'll shut up.
No, that's well said. Run your own race, because I'm much more integrated, and I never want to do what you guys are doing. I would never want to.
Perfect.
I'd be like really clearly, no, it would drive me crazy. My stress level would be off the roof. I would not be sleeping. I'd probably have an ulcer. If I was trying to do what you guys are doing, it's not my lane. It's not what I'm gifted in. So I let you guys be gifted in it. Ben, why don't you talk to me?
Well, I'll touch on that point because Reed and I talk about it, especially during a capital raise. You go to bed a lot of the time with that sick feeling in your stomach. Like the stress is overwhelming and unbelievable, and being able to compartmentalize everything and keep a happy family life and keep everything else going, it can be tough right in the peak of things. So, Anyway, but my background is actually somewhat similar to Reed's in the broad strokes. We both grew up in Australia. I grew up on the West Coast. He grew up on the East Coast. We never knew each other. Mm-hmm. We both moved to the US, him to obviously chase a girl. And I met my American wife, I think 2 or 3 months after landing here. And now I'm married with 2 kids and living in Brooklyn, New York. And Reed went off and chose his path, which was multifamily investing. And I chose my path, which was helping Australian investors invest in single family properties here, like just after the big crash when properties were, pennies on the dollar. Yeah. My business did okay, perhaps not as well as Reed's. But then, 2 or 3 years ago, we kind of joined forces and, brought RSN to where it is today. And That's kind of the 50,000-foot view.
All right, so why don't one of you, and I don't care which one of you, bring us up to speed on exactly what it is your company does, so they know. I know you
Ben,
guys
you
do
want to take that?
multifamily, but why don't you tell me your way?
Sure. I'll take a stab at it, and Reed can jump in and add and correct as needed. But we buy. The way I describe it to people is we fix and flip large multifamily apartment complexes. That's as simple as it is. Now, there's obviously a lot more that comes into it, but we're buying 80 unit, 100 unit, 200 unit buildings, and just like a single family home, we're going in there, we're renovating the exterior, putting a new lick of paint on the outside, upgrading the amenities, and then each individual unit, when a tenant moves out, we'll renovate that unit. And ultimately, we're pushing up the income that the property produces, which pushes up the ultimate value of the property. And then over a sort of 3, 4, 5 year period, we'll look to sell that asset for a profit. And our investors get a big lump sum payout at the end, as well as distributions through the preferred return. And in a nutshell, that's the business.
Cool. So let me ask this question. I'm going to reverse my questions because I did pre-read the questions to you guys, but I'm going to play with them. You ready? So what is the secret sauce of your company? Because just to be completely rude, there are lots of people that flip multi-units and add value, but you guys bring your own particular style to it. So let's hear your secret sauce.
Yeah, look, I think in general, we don't pretend to be the only player in the room. We when an investor comes to us, I tell them to go, and the beauty of what we're doing in the Jobs Act of 2012 is that you can diversify as an individual. So if someone comes to me with $1 million, I'm like, that's awesome. Let's not give $1 million to me. Maybe go split that up across a couple of syndicators. And I even tell other people who I personally invest with. And we're not trying to be the best. We're trying to be consistent and here for the long term. So we do between 3 and 5 deals a year. We're not the big groups of the room that we don't need to mention, but there are some big fellas in the room who are in 10,000, 20,000 units. We want to be sustainable, where we have a focus on we've got a core group of employees who go off and execute what we do. We have a few little nuances here and there that we do a little bit differently. We buy in bulk from Asia. I've been doing that since my days working with ground up developments here in Los Angeles, where you buy stuff in bulk, you get it cheaper. And you can do it, like a warehouse manufacturing type of conveyor belt, and you can just produce renovations at a cheaper cost. But that's nothing special. But at the end of the day, we want people to invest in us because they like us first and foremost, and they trust us. And we will immediately hit that thing what you just said, that we're not the only one in the room, and we encourage people to go and diversify and be invested across multiple different operators, because you can have the ability to see who you really like, who does the reporting the best, who is most transparent, who is a big faceless company that's just too busy to pick up someone's call. We like it that people have our personal cell phone numbers and they can call us any time of the day. So we're not trying to blow smoke up our own.
Yes.
But
drink your own bathwater is another way of saying it. Drink your own bathwater. Yes.
Right. But we're realistic in what we're doing. We just want to be sustainable in our growth and do 3 to 6 deals a year.
And I think and to me, that is part of what makes you guys so solid. When I talked about you guys were giving an economic update, and as you guys know, I'm kind of a hobbyist when it comes to the economy. I had my backside handed to me in 2009, 10, and 11. And I have a whole story behind that, which I don't need to share right now. But it really humbled me to understand that what you want is to be connected to a sense of that all ships rise and fall on the tide. And no matter how big you think you are not bigger than the U.S. economy. And you're not bigger than the international economy we're seeing now. And what I love about you guys is that you guys are really clear on you're into sustainability. You're doing the deals that work, and you guys are honoring the tide that runs our whole business, right? I mean, that's one thing. Ben, did you want to add to that?
Yeah, I think Reed said it really well. A lot of other companies out there are focused on growth. We want to have 10,000, 20,000 units under contract, and we have the luxury of having a small tight knit team where we aren't trying to grow the business to these astronomical levels. So that whole the mental effort that goes into that, the logistics, the risk, the trouble, we take that off the table by just keeping the team very tight, focused on our core of doing 3 to 5 deals a year. And the bulk of our net worth, mine and Reed's, is in these deals.
Yeah.
And we only make money if the deals are successful and we get a 70-30 profit split with the investors on the back end, us 30. If the deal doesn't do well, we don't achieve. So our interests are heavily aligned with our investors, and we're really doing this to make a good income and life for ourselves and our families, and we bring our investors along for the ride. And just having ourselves so aligned with our investors and focused on exactly what we're doing is, I'd say that's part of the secret sauce. I mean, I like to think there's a million little things inside the business we do well. Capital raising, Reed's an absolute gun on the asset management and construction and anything to do with the physical side of real estate. But yeah, that's it. Just keeping it simple.
No, I think that's to be admired. I really do, and I'm glad you guys just went there, because, like I said, there is a game in real estate of being brave enough to take this stuff on. I can use all kinds of swear words in there, but I'm going to choose not to. Right? But thank you.
Yeah.
For a minute, I thought I lost you guys. Being brave enough to take it on, but also being humble enough to say, I've got investors' money. We're going to do what works. Right? So tell me why you choose real estate to break through to your financial freedom if we know it's tough.
Yeah, good question. I think there's the old adage, like you quit your 9 to 5 to work 24/7, right? That's at least what drove me initially. I mentioned earlier that I'm 37. I've been doing this for over a decade now, and but the real sort of where I look back and where this started from was the spark to be my own boss. Was the spark to create my own path, I should say, and forge a way that maybe not be a little bit different to, say, my mum and dad or their grandparents, right? So, and real estate being something that I went to school for engineering. Like it's like I could have gone into stocks and bonds or trading or whatever, but I didn't. I know how to build something physical. So it's sort of, for me personally, at least, it always felt like a good way to place money over the long term. And it's a history will show that a lot of wealthy people are created through investing in real estate. And it's one of the fundamental, I think, needs that we need as society. Like we need food and we need shelter. So we're investing in specifically in affordable, quote unquote, affordable workforce housing, and I think that's becoming more and more scarce across the globe. This is not just a US problem. It's happening back in our home country of Australia. It's happening in Europe. It's happening in Canada. It's happening everywhere. Like affordability is a massive thing, and we're just trying to do our not necessarily small part, but just trying to invest in deals that can continue to provide somewhat affordable housing for the folk for working class folks here in the States.
Let me read something off of your guys' website. So it says, in America, a sense of security is ingrained in the culture. Select a career, go to college, get a job, work till you're about 65, retire with a nest egg of the cash you saved, hoping it will be enough to last you till you die. Sound familiar? Well, our story is a bit different. Yep. We threw that career guidebook out of the window a long time ago and left everything we knew behind in Australia to give our pursuit of financial freedom a crack here in America. For average Americans, that sounds ape bleep. Right? Ape S-H-I-T. So, I mean, you guys both did that. Ben, tell me your story. Like, what had you choose to use real estate to break through to your financial freedom?
Yeah, I mean, I grew up in a real estate family. So my dad is like the classic guy who, didn't finish high school, but grinded really, really hard, ran a number of businesses and kind of filtered all of that money into real estate. So, we'd be driving around on the weekend to be talking about this property, that property. And, I got into technology. That was my passion. I just loved computers when I was a kid. And, I kind of went from there. And I always invested in real estate on the side, and I started some real estate businesses as well while I was working my job. And, it was just kind of how can I say it? It was almost like destiny. Like I never really wanted to become a day trader. I never wanted to necessarily become heavily involved in the stock market or in, you name it, like any other kind of way you could make money. So real estate has always just been the way where I knew I'd end up.
It's funny. My daughter is, my daughter's 13, right? Since we all have kids, we started talking about kids early. So I'll share a kid story. So my daughter's 13. And I think when she was about 10 or 11, she's like, I was driving her to school. She's in the back seat because she's not old enough to be in the front seat. Driving her to school. And she's like, Mom, I don't think I'm going to do real estate like you. I'm like, okay, fine. That sounds really good. All right. So I'd leave it alone. And then about like 3 weeks later, she's like, Mom, is owning an apartment building like doing an auto grinder in Minecraft? Do you guys know what an auto grinder is in Minecraft? No?
I know Minecraft.
You know Minecraft, right? You know that?
Yeah.
Okay. So in Minecraft, you create like either a room or a big high tower where the monsters fall off, and you just collect as they fall off and they die. You just collect their drops, right? Their bones or their bows or their whatever. And you just collect it. It's on
Yep.
auto grinder, right? And she spends a lot of time building auto grinders in Minecraft because she has this. That's what she loves to do, is build, right? She's an engineer / scientist person. She loves to build. And so it's funny to me, and I'm like, yeah, actually, an apartment building is very much with a property manager is very much at, an auto grinder. She's like, okay, I'll do real estate. She says, because then I can still she can't decide between vet, marine biologist, or astronaut. If she wants to do microbiology to do in space or be marine biologist to do it at the bottom of the ocean, she hasn't quite decided yet. But either one is, of course, the extremes of what you can do on those particular careers is probably what she's going to want to do. But I found it interesting that you actually landed right into it. Was my daughter's a little like, because you never know if your kid's going to do real estate or not. I mean, she has to because she's going to inherit it. She doesn't really have a choice in that. And she could liquidate everything for all I care once I'm dead, help herself, right? But you walked right into it knowingly. So tell me about what in your history prepared you for being successful in real estate. I mean, yeah, your dad was in it, but what in particular in your history really helped you?
Yeah, definitely. Well, my dad definitely played a huge part in that. He was constantly sort of, educating me on the go, like, just asking questions. Well, why would this be a good property? Why would that be a bad property? And then like personal finance, like, how you can earn, any amount you want, you're just going to strive for it. And here's how you'd go about it. So he was very big on sort of teaching me those skills throughout life. So, understanding money, understanding sort of, everything about how to get ahead in life. And he kind of emphasized that. So that sort of set me off on the right path. And then, I don't know, I was just always that kid who was hustling. So I was always, selling burnt CDs at school, trying to wash people's cars in the neighborhood and just do everything I can to be able to make the most out of life. Having a little bit of money in your pocket, being able to afford a meal when you go to the movies with your friends is, a nice bonus. So all those little things, kind of drove me forward. And, I think similar to Reed, like we live extremely modest lives, comparatively. Like, we could be those, jerks who drive a Ferrari, but I've got a $15,000 Nissan Rogue out there that gets me from A to B. I'm very happy. So I think I'm straying from your original question here, but just having that upbringing was important, and working in tech and the corporate world definitely taught me a lot about dealing with customers, dealing with people, dealing with investors, dealing with institutional groups, because I was on the financial side of everything. So there's a lot of skills that have parlayed from my job life into the real estate world as well, and that's how I came to be here.
Perfect. Reed, why don't you answer that question as well? Because I know you already touched a little bit on how you use your capacity to organize as an engineer and to streamline systems. So tell me how that's.
Yeah, look, I think the very similar, monkey see, monkey do. My dad was a high school teacher, had some success, not in relative success, in like owning the family home and buying it well, and all those sort of things. I think it was a combination of that and then reading Rich Dad Poor Dad for me, back in 2009, after coming, back from backpacking around the globe, just wanting to do more with my life than just like sit in a cubicle. I just wasn't, wired that way. And I think another part of me is very into, unfulfilled potential, right? Like giving it a crack and giving it a go. And even if you fail at least you had a go at it, right? Never waking up when you're 70 years of age and fearing regret. I think that's another massive element that pushes me personally towards, being curious about certain things, whether it be real estate or whether it be how to do better systems or other businesses that entrepreneurs, or, I have a podcast myself. And when I talk to other entrepreneurs about what they've built, like it becomes nearly like a curious part of your DNA where you're like, hey, how did you do that? That sounds really cool. So I'm sure a lot of entrepreneurs that you've interviewed have the same sort of thing. They're curious about something. They don't want to have unfulfilled potential. And, real estate is one of those vehicles that you can use quite successfully to grow wealth in the long term.
Unfulfilled potential. I love that topic. I do. I love that topic. It was the thing in 2011 and 12 when I'm sitting in my chair going, I'm a freaking loser because I'm at the bottom of the real estate market and I didn't prepare myself for it because I didn't understand what I was looking at. And I'm like, oh, I'll just give up. I'll just give up. Let's stop being, I'm clearly a loser in real estate, so I should just stop. And it was that exact drive in me, Reed, that had me go, no, I'm not. I'm going to get back in there. I'm going to have all those calls with the banks and the short sales. And, I'm going to sell my multi-unit that's this far away from being a condo and, the lot split I was doing and the flip in Oregon I was having and the units I had in Knoxville. And I'm going to straighten all of that out. I'm going to look at each and every piece. What is it? Where is it? What am I going to do with it? How am I going to make it work? Or I'm going to throw it away. Like, what do I need to, because I didn't want to do that. I didn't want to be 80 years old looking back at my life and say I didn't fulfill my potential because I walked away from the one field I truly felt was my own.
And I think to add to that is like, it's not going to be roses and dandelions all the time, right? There's going to be hard times. And, we're coming through probably some hard times in the multi-space, in the commercial real estate space we can touch on. In the last decade, that is tough right now with higher interest rates. And I think it's the ability to continue to roll up the sleeves and get a little bit dirty. And Ben, I don't know if you want to comment on any of this, but like you can't just expect to be all smooth sailing. And when it gets a little bit tough, you've got to be able to, again, roll up the sleeves and know that you're going to be able to push through. And you're smart enough to figure out a solution. Like you were just saying before, you laid it all out and said, okay, where are the solutions lie to all these problems? Because there is going to be one, right? And that's what we are as entrepreneurs. We're about solving solutions to problems, and that might be getting out of your day job, or it might be creating financial freedom to be more with your kids, or it might be, hey, I'm going through a recession and I need to freaking figure out how to survive the next 5 years. Whatever that might be, you're going to be able to build that sort of callus on the knuckles to keep on digging away.
It's so funny because I want to run with that in both directions. I want to go like, what's happening in your industry in the physical world and how that's going to be a challenge. And I want to go into, and so what do we do to make sure we keep staying mentally in that space of having grit and clarity and faith in oneself so we can make good decisions?
Yeah, it's a tough one, isn't it? Touching back on your question from earlier, like what from the past life prepared me for this world, something relevant to that is I used to run a lot of really large projects. And it was like every other day, something would happen on one of those projects that was catastrophic. I've got like 20 or 30 of them underneath me with a bunch of project managers. There's always something that comes up. And just being able to take the hit, no matter how hard, and just say, okay, that sucks. What are we going to do?
Yeah.
How do we pragmatically deal with this? How do we, make lemonade out of lemons, or how do we minimize the impact as much as possible? And just being incredibly pragmatic when, huge hits come. And I mean, I feel like it's a weekly basis. Like, Reed will call me or I'll call him and just be like, swear word, this happened. What do we do? And neither of us like flip out and go crazy and like cry. We just you stay calm and you think about it. Maybe you don't have an answer right at the time, but just having that, that outlook of like, these problems can all be overcome. We just need to think calmly and rationally about how we move forward. And that's a huge help.
I think
in sorry to interrupt there, in terms of like what Ben's saying, having that experience from the corporate world is really important. Being also in an engineering world and just coming from that ground up construction where there's just fire alarms that you got to constantly react to, helps build oneself to be able to run a business. Obviously they're not always apples to apples, but it does. That's why I talk about when people come into this world of real estate, you're not just born. No one's just born with 15 years worth of experience. You got to but you've got prior experience that you can be used, or skill sets that can be used in building a business. And so, but then back to the sort of how do you keep a clear head? That is probably the number one thing that once you figure out the widget, the creating the wealth through apartments or self-storage or fix and flipping or hard money lending or whatever it might be.
Yeah.
It's then having the top 2 inches to when things do get tough to remain calm, because sometimes you want to punch the bloody wall. Sometimes you want to scream at the top of your lungs because it's not going exactly how you are, how you thought it was going to go. Having a business partner is really important, I think, in that, in number one. But then two, having the mental clarity, exercise, going for a walk, meditation, like having other people around you to bounce ideas off who've been through those situations. All these things help one continue to steer the ship, because we are now the captains of our ship, and we can't just jump overboard and let the ship go wherever else it's going to go, because we've signed up for this and this is what we want to do, right? So there's a lot of things there to unpack, but I think it's a combination of experience and then how do you continue maintaining clarity throughout the building phase of a business.
That's such a passion for me. It's funny to have you guys jump there, because it's, normally I'm like, hey, let's talk about, how you're going to manage this upcoming recession, or let's talk about, what's the mindset that's behind, right? Being able to dealing with a deal that went wrong, right? That's why those questions are in my list, is like, because stuff goes wrong in real estate, and being capable of grounding oneself in whatever way you do, whether it's surely through the depth of experience or through creating an inner discipline of being able to say, no, I'm not going to let my brain go crazy. I'm going to do this because I'm in the corporate world and that's my job. Or whether it's using meditation and using grounding work and having a sense to being connected to a greater sense of purpose or a greater why that draws you forward. Any one of those can ground you in the capacity to create what I call like your foundation, so you can build your success on top of your foundation and not let your own mindset destroy the foundation you're standing on through freaking out, being too anxious, being upset, throwing a fit, yelling at the wrong people. You can yell at you and your partner, and hopefully it can work out. You can say the truth, but hopefully you're not yelling at your partner either, right? You can go, oh, this is fricka, blacka, fricka, fracker. And once you're done with all the swearing and your brain is clear of all that passion juice of this is messed up, and now you're free to create, you're free to be able to find a solution, and just getting good at that process.
Yeah,
it's
absolutely.
tough.
And I honestly think that's part of what separates people who choose to be leaders versus people who don't choose to be leaders. Like it's almost like a necessary skill.
Well, it's
No, it's
also
interesting in
avoiding.
Oh, good. Both of you want to
Go
talk.
ahead,
Go
Lee.
for it.
There you go, Ben.
Yeah, it's one of those things when most people watching this have had a job at some point, and the beauty of having a job is when there's an issue that you can't resolve, there's always someone you can take it to. And hey, look, this is a huge problem. Can you help us figure this out? And when you've got your own business, you look up, there's no one else. So whenever there's an issue, it's like, okay, we got to figure this out. And yeah, it's what's the word I'm looking for? It's a different mindset, and you've got to adapt to that if you're coming from having a job. But you hold your own destiny. You get to make your own decisions, and if you've got that grit, you can choose to solve problems the way that you want to solve them, and set the direction the way that you think is best.
I love it. You hold your own destiny. Man, put that on a plaque somewhere. Seriously. Reed, what did you want to say?
Yeah.
No, I probably Ben's inspired me too much now. I just want to say one-liners. All the Tony Robbins one-liners.
Yeah.
No, look, I think it's to your point of we people are the other thing that we talk about. Speaking of Tony Robbins, human nature. We're creatures of habit, right? And certainty. I think to be an entrepreneur, to be that leader, or to go and build a business or build something, and I'm just talking just about the sort of the business side of it now. Obviously there's other parts we want to talk about, but being okay in uncertainty is also a skill you have to learn. And because so many people don't like that uncertainty and then shy away from it and never do anything, right? Just sit on the fence or sit in the cubicle or just be comfortable in their little zone. And I think that is, whether it be from, I talk to young 20-year-olds all the time, and they're like, how do I become an entrepreneur? I'm like, number one thing, go backpacking around the world for 2 years and try and make $5,000 last for 2 years and, get some life experience. It's going to be here when you come back. You know what I mean? Like, right. I'm very much that type of there's different ways to be uncomfortable, but in the business sense, it's around, thinking, okay, I've sat in the cubicle, I've done that, I've seen my boss, I don't want to be my boss, and I want to go and create my own path. And that's going to require me getting a little bit uncomfortable. But it's also require me being okay with not knowing where the next 5 years are, but still taking those steps forward. And that, to me, like, people always ask me all the time, what do you see yourself in 10 years? Like, that's too far out, man. I don't know. Let's do as much work as we can over the next 2 to 3 years, and then the 10 years will figure it out itself.
Yeah. All right. So let's talk about sort of what might be a very rich topic, which is right now what's happening in your industry. What is it facing, and how are you guys managing that?
Ben, I'll let you take that one, mate.
Where to start?
What?
Well, look, I mean, this actually touches on the session that you joined us for, where we talked a little bit about the economy and the market and whatnot. And we're obviously not going to cover all of that. But a lot of people watching this may be aware, and some not. But the start of last year saw the largest and fastest interest rate increase in modern history. And multifamily assets are fundamentally priced based on interest rates, so that's a huge factor in it. So that's been a huge challenge. Just that deals that used to be worth, for example, 40 million are now worth 35 million, and sellers don't want to sell at prices that have dropped so dramatically. So the market completely froze up. So there's been less deals. And then because there's less deals, you've got operators out there who do the same thing as us that have bigger teams. They need to keep the lights on, so they're forced to do deals at inflated prices just to bring in fees to be able to cover payroll and keep the lights on of the business. And we're lucky that we don't have that same problem the way we're structured. But there's less deals. So we're staying true to our underwriting standards and being very conservative. And because of that, we've only done a couple of deals this year, two deals, and we may do a third, but we may not. But we're not in a position where we're forced to do deals, unlike many of our competitors or industry peers. So that's a huge challenge. So the market just being tight, and a lot of competition for properties. And I'll transition away from this, but I think we are going to see a lot. There's been a lot of stuff in the news about syndicators having trouble with their properties. That's only going to increase, and I think we're going to see a lot of the weak hands, quote unquote, shake out over the next year or two. And the firms that survive these tough times are going to be the ones that reap the rewards when the market truly turns and the glory days come back. So we're excited to push through for the next 6, 12, 18 months and be there on the other side when the going gets good again.
Reed, why don't you add to that, and then I have a next question. Go ahead.
Yeah, look, I'll add that, on the day-to-day, we are seeing what the Fed wants to happen in real time. And what do I mean by that? Well, look, housing is a metric that they use in their forecast to CPI. Again, I'm not an economist, but it is backward looking, and it's 6 months in arrears. We are seeing today delinquency start to tick up, right? We have seen huge growth in 21 to 23 in terms of rental growth. We saw in some markets 25%. We have seen that pull back now, and we've started to see in certain markets higher delinquency. And nothing's really changed besides on the operation side. We're still trying to renovate. But what I believe is that we are seeing the effects of higher interest rates in the market. And renters have a limit. Certain renters can't just keep paying, 25%, year-on-year growth. There needs to be some sort of, there's a pullback happening as we speak. But that data won't show up in the Fed for another 6 months, right? So I think that we as entrepreneurs and real estate investors, we are seeing stuff happen in real time. That is giving, is good data for us to make better decisions. But it's also happening in real time, which is like, it's working. Let's not continue increasing rates, and let's start to see, I do think we'll start to see an easing. But we've also, on the lending side, we are in restrictive territory right now. Like that is, as much as people want to sugarcoat it and say we're not, we are in restrictive territory, and it's very hard to get financing done today, considered where it was, 24 months ago. To Ben's point, we are seeing somewhere upwards of 80% drop off in multifamily sales, just in multifamily sales in the last 12 months. So there is nothing happening. There's sellers aren't selling because interest rates are too high and the cap rates have expanded. So no one wants to transact. And you're either being forced to transact because you have bad debt options on your property. So you bought a floating rate debt, you bought a rate cap which is expiring, your debt is coming due. All those things are going to force people to have to sell. And we're already seeing that starting to shake from the tree today in our inner circles that we run. So said a lot of things there, but I think it is interesting just to pause and talk about where we've come from and how that's going to impact us moving forward, and what we're seeing in real-time data that won't show up for 6 more months down the line in terms of housing across the US.
I agree with you, and I think real-time data is very important. I completely agree with the gap. There's a 6-month gap between the numbers that are in, like, it takes 3 months to record a quarter. It takes 3 months to have a quarter. It takes another month to record the quarter. It takes 2 quarters to look backwards. Well, that's 6 months right there to just look backwards and be able to say, oh, this is now a trend. And even if you're doing monthly numbers, you want to see 3 monthly numbers moving in a distinct direction before you declare a trend, right? So inherently, your numbers are always minimum 3 months behind, but generally 6 months behind. So you're always looking for the indicators on the ground, and that's exactly what you're telling me. And I'm hearing that from other syndicators as well, that we're seeing the people that need to sell are cornered generally because of some version of financing. Something having to do with their financing. We can't keep it. The interest rates have gone up because it's a variable rate. We've lost our rate lock. We've gone past that time period, and they're gone, shoot, we're going to lose our investors' money because it literally is a $40,000 building is now 35 or 32, and they are going to lose their investors' capital, even if they did a great job with the building, even if it was working all the way up until that moment, even if their rehabs were pristine. It's not going to solve their problem if the market itself and the cap rate itself has moved.
Right. That's completely, and I think it's a financing problem, hence going back to restrictive territory. And, I look at people smarter than I and saying, a recession will happen as a result of restrictive territory and lending right now in the next 3 to 4 months. And to your point, I think you can do all the things you want to do on site, move the NOI 20%. But if your debt has gone up by 60% or, fivefold, gone from zero to 5%, then it doesn't matter how good you are as an operator, because your business plan cannot keep up at the same rate at which the Fed increased interest rates. And that's back to mentality. That's a bloody kick in the guts when you're like, oh my God, I'm not an operator like I thought it was. Holy shit. Yes. I'm about to lose people's money. And it's like, but I've done everything I thought I could, right? And it's out of your control. And back to what you're saying, as big as those groups are, you're not as big as the US economy and the way in which, the Fed is dealing with inflation. It is impacting everyone. And to me, I'm going to say a bold statement here, but it feels recessionary in some parts of commercial real estate already, and it's been like that for. How does an industry go from a 70% decline in sales and not be like, oh, that's and it's been now at 12 months and that's not a recessionary part of that industry? Like that seems nuts, so. I'm like, we're kind of
we're there. We're there. Even though they haven't declared it.
And I think we've been there for 6 to 12 months. So anyway, Ben, I don't know if you have any comments on that.
No. I mean, you've said it well. It's there's no other way to say it. It's a tough time in the industry, and the strong will survive, and the weak will lose out. And it's unfortunate that investors are going to be impacted by that. And that's unfortunately the game.
Yeah, we're definitely at the beginning of the slide. Like it just kind of slides from here, right? It's just people are gonna, the syndicators are gonna keep trying to sort it out, and every single deal is gonna be sorted out the way it can be sorted out individually. But we're in the slide, right? And it's a little like when you're going down. I'm looking at my daughter's slide right out the window here. Well, like once you start down that that bend at the top of the slide, your kid's going to go to the bottom. Like that's what's going to happen, right? And so we're in that. And again, to talk about the data, it's always 6 months behind. They always declare a recession after the recession has actually already occurred, because they're looking at the data in arrears, because that's the only way they can get the data is in arrears. And so, they're always going to declare it after. What you guys know, being on the streets, is that it's happening now. So let me ask you this question. You can answer either one, but I'd love to have both answered. What have you done with your current buildings to help them survive the slide? And the other is, how are you guys prepared for, gee, once we hit the bottom of that slide, we all know, and as you guys in particular as Aussies know, because you have the risk tolerance, know it's time to buy in. So talk to me about that.
Sure. Look, I'll jump in. I think Reed and I'll probably say a lot of the same things here. But structuring our deals in a super conservative way is, key. Underwriting and being conservative in our underwriting is key. So we're not overpaying for assets. We do less deals, but we, get better deals. But then, people have, we've had investors, criticize or ask questions like, why are you buying a rate cap on that? Why are you doing fixed rate debt? Interest rates are going to go down. And, we sort of say to that, well, we think interest rates are going to go down, but there's a good chance that they don't. And we want to be protected against that. And if that means that it's not a 17% IRR, it's a 15% IRR, we think that's the prudent measure to do. So we're not trying to maximize our returns and investor returns as much as humanly possible. Mm-hmm. We want to make good, stable, consistent returns that, protect our capital, our investors' capital, make a good return. You can hit singles, you can hit doubles. Not everything needs to be a, swinging for the fences home run that, relies on perfect, refinance terms or perfect interest rate activity in the next, 3 to 5 years. Yeah. So that's a big part of what we're doing. And then just focusing on the day to day, just doing what you can do and what is within your control really well. And, Reed can maybe speak about that and anything that I've covered, but that's really his forte, just making the assets run really well.
Yeah, look, I think that we've had a couple of things that have been outside of just interest rates going up. You've had payroll. Yeah. You've had payroll go up, which has been a massive and very sticky in inflationary environments.
Good point.
Beg to argue, will we go back to $19 an hour for the average laborer on site? I think it comes up and it stays high.
It goes up, it stays there.
Insurance. Yeah. Right. Insurance has been a massive one in the multifamily space. Like that has gone astronomical. And I remember $250 a door for insurance back in 2013, 14, 15. Today, Central Texas, you're probably paying well over $1,000 for 80s vintage property. Like it is tripled.
Yeah.
And I don't think anyone's underwritten to that, right? So there's those factors are going on. You're having a bit of more delinquency, which we spoke about earlier. About that's just the time in the saddle. Now there's higher interest rates. It's starting to hit, the bottom line of folks. At the end of the day, my role at RSN is to try and look forward and see what are those skeletons in the closet that could eat us. How are we 6 to 12 months ahead of that to try and make sure, if we've got a deal that we need to go refinance or we need to do a rate cap. And luckily, we've only got really one out of the portfolio. I know a lot of people have more, but we've got, we're working on what we can control, keeping to push the NOI. There will be a time when interest rates will cut. No one knows when, right? No one has a crystal ball, but it will come.
End of 2024, maybe, right?
Right. But you have to then say, okay, well, if we need to survive till then or survive beyond that, what do we need to do today to make sure we get there, right? And not lose people's money along the way. That's on existing deals that you have problems. And then there's people out there who have these exact conversations that are happening right now. So I think getting out in front of anything that you do have coming down the pike, other stuff like the deals we're buying today are all fixed rate, right? There's no more issues with that. And I think you've gone back to a more historical way of underwriting. I remember, I think I was on this podcast or another podcast. I'm speaking to you, Christina, when one of my first deals I ever purchased was with a Freddie fixed rate 4.6% loan back in, must have been 2015 or 2016. And I had a huge defeasance on it because it was a 10-year product, right? Yeah. And your comment was like, well, at least it was fixed. I'm like, yeah, but we could have sold it 6 times over if we didn't have it. And then when we did sell it, I still had $1 million defeasance. But that's it's sort of a different way of looking at different things. And so that particular deal, we learned from. But guess what I'm doing today? I'm locking in 5 years interest rates today at 5.5% because I'm not wanting to gamble with floating rate debt, right? I just don't want to gamble.
Oh my God, so that's such a great story, Reed. Thank you for letting me know. Because of course I think of, I cherish the long horizon line and I pay fees for the long horizon line. And you're right. I would have been what came out of my mouth was, oh, at least it was fixed. You were protected because, having gone through the downturn, I'm like, I want protection, right? That's in my brain. And I love that. Like, it's like, well, now you're like, well, protection sounds good. Like, I so appreciate, like, yeah, Christina, you were clueless about what I was telling you about before. And now I have a little more sympathy for what you were telling me about before. I love that. Thank you
Oh,
very much.
I'm probably going to look. We're going to look like idiots in 3 or 4
Yeah.
years' time. Be like, oh,
Right.
why'd you
Yeah.
look at 5.5?
Right.
You know,
Exactly. We're
You
going
know,
to look like idiots. You know, hey, I got you a deal, and I got you a deal that doesn't move. Okay, be grateful.
Right.
Your money is protected. That's ultimately
Right.
Warren Buffett, right? What's the number one rule,
Don't lose people's money.
right?
Don't lose money.
Second rule,
What's number two?
number two,
Same thing.
Look at number
never forget number one. It's like,
Yeah.
right? So it's just, again, I just so appreciate you guys. I really do. I appreciate the solidity. I appreciate the mindset. I appreciate the willing to risk and the willing to be humble, keeping your team clean and keeping your mindset clean. I can do nothing but respect all of that. So thank you guys for being exactly that. If people want to get a hold of you, they want to invest in your deals, how do they do that?
Ben, where's the best way for them to go?
I think go to www.rsnpropertygroup.com
Mm-hmm.
and you'll be able to contact us through there. You can get on our mailing list and see live deals hitting your inbox before they go to the general public. And you can reach out, you can schedule meetings with us, you can talk to us on the phone. We're very available and always willing to chat to new investors, new partners, and anyone who can help us all achieve our common goals.
So www.rsn, right?
Propertygroup.com.
Beautiful.
And if you're ever coming through Los Angeles, hit me up at reed@rsnpropertygroup.com. I'm always interested to have a coffee, grab a beer. We can talk shop. So we're very open, and I know Ben's in New York, so I'm sure if anyone's going through New York as well, he could do the same thing.
Absolutely.
Beats volunteering your time. Just saying, Ben.
Does it all the time.
That's all right. Thank you so much for listening to Christina Suter on the Real Estate Breakthrough Show. You can find me at christinasuter.com. You can find this on Amazon TV, Roku TV, and YouTube. You can also find the podcast on iHeartRadio, Spotify, and some other platform I can't remember right now. Thank you so much, guys. See you next week.